South Korea to mandate high-ranking public officials to disclose cryptocurrency holdings by next year. Last updated December 27, 2023, 5:21 EST. 2 Min Re-Disclosure. Crypto is a high-risk asset class. This article is provided for informational purposes and does not constitute investment advice. By using this website, you agree to our terms and conditions. We may utilize affiliate links within our content and receive commission. South Korea has announced that high-ranking public officials will be required to disclose their cryptocurrency holdings starting next year. In a Wednesday press release, the country's personnel ministry said this proactive approach is intended to address potential conflicts of interest and promote integrity within the public sector. The decision comes amidst the growing popularity and adoption of cryptocurrencies in South Korea, where digital assets have gained significant traction among both retail and institutional investors. By mandating disclosure of cryptocurrency holdings, the government aims to ensure that public officials maintain the highest ethical standards and avoid any potential conflicts that may arise from their involvement in the crypto market. Officials need to report details of crypto holdings. The new requirement will apply to high-ranking officials across various government agencies and departments. These officials will be obligated to report their cryptocurrency holdings, including details of the assets they own and the respective amounts. The move is part of the government's broader efforts to strengthen regulatory oversight of the cryptocurrency industry and promote transparency in the public sector. With the implementation of the licensing regime for VA trading platforms from June this year, the legislative proposal to regulate FRSs, another important measure facilitating Web3 ecosystem development in Hong Kong, the Secretary for Financial Services and the Treasury, Christopher Huey, said. More countries adopt tougher crypto regulations. South Korea's decision to mandate disclosure of cryptocurrency holdings reflects the growing global trend of increased regulatory scrutiny surrounding digital assets. As cryptocurrencies continue to gain mainstream acceptance, governments worldwide are taking steps to ensure the proper regulation and oversight of this evolving financial landscape. Likewise, back in 2020, the Financial Action Task Force introduced the travel rule, formerly known as FATF Recommendation Number 16, which orders virtual asset service providers (VASPs) to share the information of the originators and beneficiaries of crypto transactions that exceed a certain threshold. A number of jurisdictions have made insufficient progress on implementing the travel rule. In a move to align the country's legal framework with the global standards of the FATF, Japan's cabinet implemented tougher AML regulations in May, requiring the tracking of all cryptocurrency transactions. One significant element of this revised framework is enforcing the travel rule. Financial institutions must now disclose information on customers who conduct crypto asset transactions, such as their names and addresses. This ensures full disclosure of customer information between financial institutions. Enter your email for our free daily newsletter or quick 3-minute read about today's crypto news. Sign up. The site is protected by reCAPTCHA and the Google privacy policy in terms of service apply. IMG-SRC equals https://simg. co/p/ml300 jpeg alt equals image class equals imgid equals newsletter pop-up img